right, let's do it. It's time for your weekly prop trader market update, hosted by me, Derrick Oldensmith, over here at T3 Trading Group. I'm an associate member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. All right, quick position disclosure here. Definitely juggling around some of my longs a little bit, added on some new stocks. It's a bull market. Let's talk about it. Actually, first got to talk about myself. I'll look at that. They changed the picture up a little bit. I am senior trader and registered principal with T3 Trading Group. I've been at the company for 11 years now. Started at the entry level, worked my way up, started my own trading desk for the company in 2013. Been managing professional traders for I guess 8 or so years now. Currently managing a group that's in excess of 100 people. Got to get some of this other stuff updated in this document here also. Big into martial arts, big into skiing, big into traveling, big into trading. That's my personal hobbies. Here's my email address. I'm going to be talking about charts, right? It's a weekly update. It's where we talk about what the weekly update is for the market, what's been going on. Specifically, I'm going to be talking about short squeezes a little bit today, because it's definitely been an area of focus for my team and I these last couple of weeks. And then after I talk about markets, I'm going to talk a little bit about T3 and how you could potentially become involved with my team of professional traders. There's a couple of ways to do it. Here is my email address. Feel free to email me at any time about anything, and I'll either get back to you myself or have one of my teammates get back to you to discuss whatever it is that you want to discuss. Feel free to reach out to me about anything. All right, let's go to the charts. Okay, so even though I'm really going to be talking mainly about individual stocks today, and specifically I want to talk about some of these things with these short squeezes, I always do feel the need, no matter what, to talk about the S&P, the NASDAQ, and the Russell, to talk about the indexes, because the index itself is just such a huge, important piece of information that we need to make sure that we're analyzing on a day-to-day basis, if not a 5-minute to 5-minute basis during trading hours, because it's just such a hugely important, what I call, layer of probability for your trading overall. So the S&P is having a little bit of a weaker day today. Where are we on a percentage basis? S&P right now, SPYs are down about 0.3%. Qs are up 0.15%, so they're showing a little relative strength. And the Russell is actually down 0.4%. So the Russell's relatively weak in this moment. You can see here the last, we kind of broke out on August 30th, and the last 5-6 trading sessions so far, including today, have basically been consolidation. We've gone sideways. This is very boring price action, and seasonally, the last couple of weeks into and through this week are usually some of the slowest weeks of the market for the entire year. This week in particular, it's a 4-day week for the market. Yesterday was Labor Day. I hope everybody really enjoyed their time away from markets for the long weekend. It's also the Jewish holiday, Rosh Hashanah, so Happy New Year to anyone who celebrates that and might be following along today. But what that leads to for this week as well is it's usually a pretty boring week, and we can see that in the price action here of the S&P. It's just been really tight, really boring. The right thing to do here is to continue to err to the side of the longs. That's something I'm constantly telling my team, because it is clearly a bull market. We're a hair away from all-time highs. Even though the S&P has been really boring, we'll take a quick look at the NASDAQ and the IWM also. Even though the S&P has been relatively boring, there's been a lot of actual opportunity on an individual stock basis, though. NASDAQ here, same thing. It's just been consolidating for the last 5 days. We saw a little bit of a topping tail on September 1st, a little bit of a shooting star that coincided with topping tails in Apple in extended territory. We're now above that as of today's trading session. This is a beautiful setup, by the way, for continuation in Apple. One of the things that my team and I spoke about in our morning meeting was looking to buy Apple through 155 today. It's at 156 right now. You know, this candle on September 1st is a shooting star candle. Usually what this leads to, or often what this leads to, is price correction to the downside. You didn't get price correction here. You actually got 2 days of time correction. That's actually really bullish for when this high breaks, because a lot of people, when they see this type of candle come in, they initiate short sells or they sell their longs. And then if instead of getting a price correction back down where people can come in and buy the dip or they can cover their shorts, if you get this time correction sideways that then leads to a break of this high, what does it mean? It means that anyone who is a short seller this day or anyone who long sold this day might be getting squeezed out or retracing into the market. So this Apple setup is definitely a beautiful one that we really like here on the desk. And it's led to great continuation higher. The NASDAQ has not yet been able to break that high. It could do it today, though. I mean, we're really close, especially if Apple maintains its strength. And the NASDAQ is being relatively strong as well. That same day we saw Amazon give a little bit of a topping tail. That actually led to the price correction. Whereas the Qs and Apple both went sideways, Amazon gave like a day and a half price correction back down to the 80 EMA, and now it's working its way back higher in this gap, looking like a potential higher low, possibly leading to a higher high. It's getting really close to it as of right now. What about our Russell? The Russell's been really interesting to me recently. We highlighted this dip buy some weeks ago in the Russell, and ever since then we've seen almost continuous relative strength. Out of the last, I'm not even sure how many trading sessions this is now, let's just call it 12 days. Out of the last like 12 days, 10 of them or so have had relative strength for the Russell, relative strength for the IWM. Right now, as of today, for today's trading session, the NASDAQ is actually relatively strong compared to the Russell. Again, relative strength and relative weakness is something I've spoken about a lot on my weekly webinar. It's been one of the keys to successful trading in the calendar year of 2021 has been understanding money rotation and relative strength. But the Russell just had this massive breakout here back on August 27th where it cleared two key resistance levels in the same day, 222 and 225, and it's for the most part shown continued relative strength. Today it's a little bit weak, but it's also extended, whereas now the NASDAQ and the S&P are not extended at all. The IWM, because of the strength and the move it had, is a little bit extended. So to see some back and forth between the indices is fine. It's actually a healthy sign of a bull market, is to see constant and consistent money rotation coming in. But for right now, you know, a little bit of weakness today, pulling closer to the 80 EMA on the Russell. It's just fine. You know, when we see strength here in the Russell, we also tend to see strength in value type stocks, your energy type stocks, your materials, and we also see strength in small caps and mid caps, which one of the most interesting things to me over the course of the last couple of weeks is not only so the Russell here, part of me correlates the IWM when it has strength with strength in value, right? Which is a lot of your more boring type names, right? Your U.S. Steel and material stocks and energy names, ExxonMobil, those types of names. At the same time, I also correlate it to some degree to the most speculative stocks that are actually in the marketplace, which is your small cap type names that we've spent a lot of time talking about that pulled back, you know, so far from highs and recently have been trying to give, you know, bigger bounces. Stocks like a Jumai, which since mid-August has bounced back from, you know, $17 back to $22 resistance. Stocks like a Palantir, which this thing's been on a tear, had this big gap up on its earnings report, created support there, has given some sort of upside continuation from that point. Other speculative names like, you know, like SoFi. SoFi over the course of the last 4 trading sessions, I have a position in this one, has now traded back into its gap, given a move from 14 to above 16 today in like, you know, four type trading sessions. And this is actually what I really wanted to speak mostly about today is these speculative names, but specifically the short squeeze speculative names. So a lot of people think about AMC and GameStop immediately. By the way, even though AMC is the one short that I have on, I'm pretty light in it, and I'm rooting for it to go up even as I'm short, because I know that if AMC is really starting to rip again, and the animal spirits are really coming alive in the marketplace, that's just going to breed overall fantastic trading opportunity for me. I actually called out this bullish setup on this day here, August 24th, for continuation, and AMC's just been looking good ever since then. It's looking really bullish right now. It's having a strong day today. This next clear level of resistance that needs to be broken is about the $48 area. So love seeing the strength come back into AMC, even as I am lightly short the stock. GameStop has been a little bit more of a struggle. I think they have earnings tomorrow. Someone should fact check me on that. Someone said in the VTF earlier today, the ProDesk virtual trading floor that I'm running, that I think GameStop has earnings tomorrow. So this one's been a little bit weaker. So those are the first names that we start thinking about, right? BlackBerry is another one. I actually traded BlackBerry to the long side last week. Can you believe that? It's funny because I love to hate on these companies. We saw BlackBerry. Was it September 1st? Let me look at Apple. I'll remember based on Apple. I actually can't remember. But we saw like great strength coming to BlackBerry and Apple at the same time one day. And a bunch of guys on the team were buying Apple off the open, and me and a couple other people on the team were buying BlackBerry off the open that day. And I was just making jokes in the virtual trading floor, like, which is the better cell phone, BlackBerry or Apple? Like, who's got a BlackBerry? Anybody? And of course, the answer to that is nobody. But it's crazy to be trading these stocks. I know BlackBerry is getting into cybersecurity a little bit also. That's created some strength. So those are the first names that we kind of think of when we're thinking about short squeezes, but it's really become spread out a lot more, right? Look at what we saw like in this BBIG. Okay, I can't even see the top of the chart. There it goes. Look at this thing ripping from $3.40 to $12 over the course of 4 days. Look at SRPT. Look at the run that this thing had. $10 to... what was the high this day? 60 just about. Sick move, right? Again, those are short squeezes. This ANY that I was trading on a couple of these trading sessions. I think I was involved in it. Man, I can't remember. One of these days over the course of the last week or so, I was involved in it to the long side, just for an individual trade that day. Then I got out of it. Actually, I think it was this day. Yeah, it was on September 1st. Which day of the week last week was September 1st? Wednesday of last week. I was buying this ANY. We were seeing a lot of bullish option flow come into it. I actually sold my position in the close because it didn't close well, and then obviously the next day is when it had this insane rip. BTCM. BTCM is another one that I was trading last week into this rip higher. Somebody tweeted about the cost to borrow on this BTCM, representing that there's a lot of shorts involved there. So anyway, the point is, even though the market's being really boring right now, if you are thanks for that, Paleo. If you're like a shorter term trader, there actually has been a lot of opportunity. I just want to talk about the risks of these stocks as well as the reward potential. So one thing, first of all, reward potential. We see these stocks go 100% sometimes in a couple of days here. They're pure short squeezes. I'm trading some of these things, and I don't even know what the company is, what they do, nothing about nothing. I traded this BTC on this day here on September 2nd, and I didn't even know until after the market closed that day that I was trading a company that I believe does crypto mining in China. Why would you, from a thought process, like forget about charts and technicals for a second and short squeezes and all that stuff, why would anyone want to be along a company that does crypto mining in China? The Chinese government doesn't even let you do crypto mining in China. It's insane. But who cares? Stock's going up. There's a short squeeze happening here. I can make money. So I'm not an advocate. I mean, look, I've said it for a while. I got no problem with people being long AMC. As a matter of fact, I've called out buys in AMC. My team in the morning meeting, we called out the buy at GME at 167 on August 24th, which was also a fantastic trade. I got no problem taking these things to the long side if they're going to make me money. If you ask me, though, to put my fundamental hat on for a second, even though I'm really more of a technical guy, where do these stocks belong? Well, GameStop is probably a $40 stock. That's probably where it belongs. AMC is like a $3 stock, $4 stock. That's probably where it belongs. This Chinese crypto company to even deserve being a company, I have no idea. But if they're giving opportunities to make money, then why not? The biggest thing I'm going to say about being involved in these short squeezes, and this is really something that my team and I have been looking at and looking for recently, because this is where the price action has been, is you got to keep in mind a lot of this stuff is going to be relatively short-lived. I know AMC, really impressive just how well it's been able to hold up and for how long in the 30s and 40s like it has been. But let's also take lessons from the mini stock market bubble that we saw in February. In a lot of ways, it seemed like even though the S&P and the NASDAQ keeps going up, in a lot of ways, it really felt like we had a top to the market back last February. That's where the top of these squeezes were for all of these types of speculative names, and then so many of them are down huge from there, right? Palantir, $45, then it goes down to $17. Jumai was $70, then it goes down to, $16, $17. Some of these crypto names, right? Like a BTBT. This thing was as high as $33, goes all the way down to $4. And even with these bounces, if you're bag holding these stocks from $30, okay, great, you caught a nice little bounce back here, but these are not companies, in my opinion, that you really want to be married to. Look at this Skills, right? Skills, $46 stock, pulls all the way back to $10. You don't want to be a bag holder in these names. Fubo, I have a position in Fubo right now. This thing in January put in a high of $57. December of last year put in a high of $62. And now even with a decent bounce back, low of 15, decent bounce back all the way to 30. These are very volatile stocks, right? So a lot of these new ones, let's take a look at SPRT. Look at what this has done now. It's like, yeah, you got that great squeeze higher to $60, and now it's already pulled back to 17, 18. A lot of the times when you're seeing these short squeezes, it's exactly that. It's forced buying back, a lot of times from institutional shorts that are out there, where they're being forced to buy that stock back at any price. And for the most part, these companies don't necessarily really belong there. So we got to be very careful about not marrying these companies and really just trading them for when the opportunity is there. Another one of the really big risks that you can run into, let's take a look at this ANY. I mentioned I was involved in this ANY on September 1st. I closed my position into the close, and then fine, the next day it had the big rip without me. That day it went to a high of, why can't I see the chart? It looks like $10, $11 or so. Yeah, look at that. Never mind. $12. So that next day, it made a high. It ripped all the way up. I stopped myself out in the close at like $6.60 or so. Next day, yeah, I'm looking at this thing trading up to 12, and I'm like, oh man, I can't believe I was just in this one yesterday and got myself stopped out in the close based on this week close. But you got to be careful. So the danger here, what happened with this ANY? Goes to 12 bucks. It closes that day at about 9.50, and then the very next day it opens at 7.20 and trades down to 6.30. What if you bought this thing at $9? ANY, you bought it at $9 on this day. It closes around 9.50. Maybe you think you're safe. You booked a little bit of profit for yourself intraday. You're closing 50 cents in the money. You keep it. Why did this trade all the way back down? Because they announced a secondary offering that day. And that's one of the big dangers of being involved in these stocks. Guess what? AMC. Why did AMC top out when it did? Right? It had this crazy squeeze up. It went to $72.62. The next morning, pre-market, it was trading at $77. Why did it then that day trade all the way down to a low that was as low as about $37.50, $38? Why did that happen? Because they announced a secondary offering. So what you guys got to remember with a lot of these companies that are, small caps, mid caps, maybe they're having short squeezes or whatever it is, if management is good management, like AMC honestly was, GameStop was not. What they're going to do is they're going to utilize their higher price to raise more money. Because a lot of these companies, probably almost all of these companies that I really put into that speculative category of stocks, they're operating at a loss. And if you're operating at a loss, how do you continue to fund your operations and hopefully you can become maybe like the next Amazon or whatever that operated at a loss for so long and obviously now is one of the greatest companies of all time? What you got to do is you got to be able to consistently raise new money. Well, if you can do a secondary offering, if you're the AMC CEO and your stock was, you know, really it was all the way down here at probably where it belongs, at like $3, $4, whatever, and now all of a sudden your stock is trading at 70, you can utilize your stock price to be able to raise money for your ongoing operations. That's exactly what we see a lot of these companies do. This ANY did exactly that. CEO was like, oh my God, look at this. My stock just popped from $3 to $9.50. I don't even know what ANY does, by the way. Sphere 3D Corp. I traded it that day. Still don't know what they do. I'm just going to assume it's some sort of 3D printing company, but I really don't know. But you see your stock ripped from $3 to $12. You go, all right, this is a great opportunity for me to do a secondary offering to raise more money. But what is a secondary offering? A secondary offering means that the float of the stock is going to increase. There's more supply out there. So if you have a stock that all of a sudden has more supply, but the demand to buy it remains roughly the same, and that's usually what's going to happen, what does the stock price do? It goes down. So it's one of the biggest risks with these companies. And if you're a good CEO, that's exactly what you're going to do. You're going to use your higher stock price as an opportunity to raise more money. For me as a trader, that means you got potential danger here. You know, you hold an ANY, your price is $9. Next day it opens up at $7.20. You might have a real problem going on here for yourself. So the way that I'm trading these is I'm looking for the technical signals. So we're paying attention to institutional option flow coming into a lot of these stocks. We're paying attention to irregularly high volume coming into these stocks. Of course, we're paying attention to our technical setups for momentum continuation trades from an execution perspective. But what I'm doing with a lot of these, like this MMAT is one that I'm in still right now. I got in this one last week at about $5, a little bit below $5. I think on this trading session, we saw some option flow come in. You know, next morning it's trading all the way up to 642. I still have a small position in it. What I'm doing with a lot of these stocks is the day that I get involved, when the volume's there and the option flow's there, if they trade in my favor, I am trying to book out a lot of my position. I want to make sure as much as possible, and obviously you can get an event like this ANY where they announce a secondary and just gaps down huge on you, but what I'm trying to do is as much as possible, I'm making sure in that first day to try to be covering or selling stock on the way up, to be able to book as much profit as possible, do the best that I can to really make sure that my risk is as covered as possible. And then you know what? That smaller percentage of a position that I still might have, when I feel like I've covered a lot of my risk, then I kind of go for it. You know, I kind of YOLO it, if you will, on the remainder of my position, and I say, all right, I'm all in or I'm all out. You know, this MMAT, like fine. If it comes down and it, you know, stops me out below $5, which is probably where I'll get stopped out in this thing, guess what? I'm still gonna probably be profitable in the trade, but if this thing is the next one that has the massive short squeeze, like, you know, the BBIG or like this SPRT, and we're seeing a lot of this happen, if this becomes the next short squeeze one and I'm in from $5 and it looks like it's just waking up, next thing you know, my smaller position at $30, $40, $50, $60 all of a sudden is giving me a lot of P&L. So there's a lot of risk, there's a lot of potential reward. I love this type of price action, by the way, because it creates for an exciting market when otherwise things like, you know, the S&P and the NASDAQ are just kind of really slow right now. Well, and with that said, there's obviously been a lot of good trades going on in Apple. But this is just, you know, a lot of what I'm focused on, right? This FUBO, we bought the breakout here at 28. I still got a position, trading it back and forth a little bit. All these speculative type names, these potential short squeeze type names, paying attention to the volume, paying attention to the option flow, or paying attention to the technical setup to 28 was your technical break on that day. There was great opening volume on that day. And once I got as much as possible, I feel like I've got that risk covered, then you know what? I'll YOLO a small percentage of my position. And if this is the next one, you know, if that MMAT or when I was in that BTCM, if that becomes the next one that is up massive, I mean, this was a pretty big move in and of itself, a break from, you know, $10 up to the next morning almost at 15. But if this becomes the next one that's at 60, I'm going to try to have a little bit of my position left. That's going to give me a lot of bit of reward. And at the same time as all that, I'm keeping in mind in the back of my brain what I just went over earlier about how we saw the big bubble in speculative stocks coming in February, and if you're a bag holder on those, you're holding it all the way down, and they've come down, you know, 75, 80% some of those stocks. So we're not marrying them either. We're taking them as shorter term type trading vehicles. So that's really all I got. That was kind of the lesson I wanted to focus on with you guys today. Because it's been a big kind of focus for my team and for myself and my team right now. So real quick, let's talk about how you can be involved with my team, because there's a number of ways you can do it. So the main thing I'm going to be talking about is prop trading with T3 Trading Group, but also you could just get a subscription to the ProDesk virtual trading floor through T3 Live, which I'm managing. It is primarily composed of professional traders through T3 Trading Group. So if that interests you, just reach out to info@t3live.com, info@t3live.com, and you can find out about being a subscriber for ProDesk. You can also get a retail account at T3 Trading Group. It's really, the retail accounts at T3 Trading Group are fantastic, but they're really gauged towards the more professional type trader who's trading very active and is kind of sophisticated. There are some monthly costs involved with just having that account as an example. So it's another way that you can become involved with my team and with T3 Trading Group. If that interests you, reach out to info@t3trading.com. And then the main thing that I'm going to be talking about right now is how you can become a professional proprietary trader. So T3 Trading Group is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We've got different physical offices. We've actually shut down a lot of our physical offices. We're really finding that those are a little bit, I guess, less useful in post-COVID times. You know, just a little bit of a different world right now, which is fine. I'm in our Manhattan office right now after having spent a year and a half traveling through the great country of the United States and seeing a lot of different places. But we do have 4 offices. They may become open again at some point to traders. And again, we've got remote traders throughout the entire country with access to the virtual trading floor that we've developed. To be a professional trader, you do have to be licensed because we're an SEC broker-dealer and member of FINRA SIPC. You have to pass the SIE, Security Industry Essentials, and you have to pass a Series 57 exams in order to work with us. In addition to that, you have to pass an FBI background check. Once the exams are passed, we have 4. I got to get the spreadsheet updated. We have 4 different trading software options available. We've got Lightspeed, Tachyon, Sterling Trader Pro, and WEX. A lot of newer traders and even experienced traders are gravitating more towards Lightspeed or Tachyon at this point. Asset classes, we've got equities. That's my focus. We've also got equity options. We've got futures. We've got options on futures. Whatever your fancy is, reach out to me and I can talk to you about it myself or put you in touch with the right person. Just, I guess, a quick word on trading equity options. I speak to a lot of people who are interested in joining T3 on a professional basis who ask me about trading options. And if you want to trade options, it's absolutely something you can do. I don't. The number one reason, in my opinion, to trade options in a retail account is because of the natural leverage that is inherent in the option product and the option contract itself. And you can't get that degree of leverage just by having, trading stocks on like a Reg T margin account. On a professional account, we give you access to so much capital that I really think trading options for leverage kind of becomes a moot point. So on the equity side, as a professional trader, we usually start by giving you 20x your money for day trading and 8x your money for overnight positions. So my thought process has always been, why do I want to trade options which suffer from time decay and are a less liquid product just for capital access and I already have as much capital access as I could ever want. So that's why I'm an equities trader. We do have option traders here at the company. They tend to not be as directional focused. A lot of times they're doing more complex option strategies like spread trading or what have you. And if that's you, definitely reach out to us because we can set you up for it. New traders should be aware that we really pride ourselves. I myself pride myself on the training and development that I've created for T3 over the course of the last 8 years or so that I've been working with professional traders. We do a daily team morning meeting every day at 9 a.m. Eastern, a daily team afternoon meeting at 10 after 4. Every afternoon meeting ends in a group Q&A session where it's an opportunity for any trader, regardless of experience, to ask any question about anything trading related. You also get access to a 1-month training program that I developed, and all that is for free, by the way, if you're a professional trader with the company. We want you to be as successful as possible. We're incentivized to make you successful. That's how everyone is going to make the most amount of money. So that's what we want. You will be required to fund your professional account with what we call a capital contribution. And then I already mentioned this earlier. We typically start by providing what's called buying power at 20 times your contribution for equity day trading, 8 times your contribution for overnight positions, and then you're compensated through a profit split. And if you're a big trader or an experienced trader, well, we're a great place to come with also. Don't think to yourself, all right, well, I got my retail account that's got $1 million in it, so why would I ever want access to a prop account? Well, if you've got a professional prop account with $1 million in it, we're going to give you access to $20 million for day trading if you want it. So we've got size here at T3, and it enables us to provide scale to our traders that may not otherwise be possible. And you're going to get access to all this other great stuff for free. You get access to my virtual trading floor, my training program, you get access to Scott Redler. Again, happy to just give this stuff away for free just because we want the people that we're working with to be as successful as possible. So here's my email address again. If you are interested in pursuing trading for a living, I really think that T3 is the best place to be. Trading for a living, to be honest, is not right for most people. But if you think it might be right for you, and this is something that you really want to go for, reach out to T3. Here's my email address, Oldensmith, first initial, last name, @t3trading.com. Feel free to reach out to me about anything. I'm pretty busy, but I like to think I'm a pretty nice guy. So don't be shy, gang. All right, with that said, I've got positions on. I'm going to get back to managing them. I hope everyone had a fantastic Labor Day. It's September. Next week, I'm hoping that things start picking up again a little bit more for the market. I'll see you all next Tuesday for next weekly update.